Okay guys, just checking in for another trade execution video on BTC, 16th of February 2023. Right, so we're going to keep this video incredibly short and sweet. We're going to start off with the daily here. Okay, so we can see that yesterday we had a very strong move to the upside. And okay, so basically had this daily demand zone marked out. I had two zones marked. The first were taking the candle bodies. This is a very clean zone for me. You've got daily intra-demand / order block, whatever you want to call it. But I'm also aware that we have these sort of extended wicks to either side, which change what this zone looks like by quite a deal. And sometimes we don't get the wicks or press down into the bodies themselves. Instead, we just touch into the sort of extended areas here and then move. Okay, so firstly, we can go down to the 4-hour and we'll just talk through the thought process, right? So first to acknowledge is we have a very strong move to the upside, okay? As we do so, we create this range, okay? We have a range-bound environment here. So just mark on our basic range. And, we have a very conveniently placed pocket of daily intra-demand underneath this range, okay? So always when these sort of accumulatory ranges form after strong impulses, we're looking for the deviation play as our sort of port of call if we have some sort of substantiating arguments in terms of liquidity dynamics, as we do here with this daily pocket of intra-demand, okay? So we're looking for the breakdown, we're looking for price to start diverging into this liquidity zone, and then we're looking for the move to the upside. Now, as I'm sure some of you are aware, we also have this potential PO3 style play here, where we have the range, we have the deviation, and then we have the very sharp move to the upside, which cuts through the previous range all the way to the other side, okay? That did indeed play out, but of course we're looking for the triggers, right? And those were primarily taken based off the 4-hour and the 6-hour. So we can see here we have a clear divergence on the RSI and a clear picture on the AO. Both of these pictures have higher lows where the candle bodies have lower lows. Now, if we move over to the 6-hour, we can see it a bit cleaner. So the 4-hour here is a nice picture. It's what we want to start seeing. But the div is slightly overextended. The second leg isn't pressed down into the oversold region. So the primary time frame for execution was actually the 6-hour for this trade, okay? So here we have a very nice picture, right? We have that second leg into overextension. We still have a very clean picture on the AO. And it's important to know which time frame is your sort of trigger, because that will help with your execution, of course, yeah? So basically there were two stabs at this trade, one missed opportunity. So I'll run through all of them so you can see just how it happened. I'm going to be very candid about what happened, how I could have traded this better. Regardless, it was still a very nice trade for us. So basically, we're looking for, as I said, the divergence into the zone. We can see that we have that here on the 1-hour, okay? So we have the 1-hour diverging into the demand zone. We have some nice wick action as well. So this was a nice picture for me to warrant, entry to the trade. So I started scaling in around here. Once we're into that daily demand zone, we start pushing up and then we come back down, okay? So I think around here I closed the position thinking there's not enough oomph in this trade, okay? This isn't exactly the reaction and the result that we want to see. So I came out at just above break even, but pretty much break even. It was negligible profits, okay? So that was the first stab at the trade. The second stab, well, the missed opportunity, which I should have seen, was basically that we came down to take out these lows. We swept the low, we swept the sweep, and then we started moving away. We had a clean 1-hour bullish engulfing candle here. Really, this should have been enough for me. I should have taken entry here, but I was too wrapped up in the previous trade. And, as well as that, I was aware of the CPI data release soon to come. You can see the volatility here. And normally I don't like positioning into macro events. So yeah, basically as a result of being wrapped up in this trade, this being to come, I missed my entry here. Basically my fault entirely. I should have had my eyes on the ball a bit more. But anyway, we're shaken out of this, taking this entry here. But, as this was developing, I said to myself, okay, look, we do have CPI data coming out, but, the 4-hour and the 6-hour picture is so clean, and we waited so long for this setup that, it's irresponsible to not take position based on what we're seeing, essentially. So, yeah, so basically what I said is that I'd take 50% of the entry on the 4-hour close and 50% on the 6-hour close. So it turns out that both of those were at midnight, I believe. Yeah, so basically this candle body here on the 4-hour is where I took entry for the first 50% installment, what should have been. But then you can see on the 6-hour again, it's that same sort of point in time. So that was 100% entry there. We put our stop underneath the candle body. So I didn't quite go down to the wick, I put it to the candle body there. The reason being is because we have a clean bullish engulfing candle. We've just swept this low into the demand zone. We have, of course, this clean 6-hour lock-in, the 4-hour lock-in, etc. And really, this should be the push, okay? I'm not going to tighten up my stop to, somewhere silly like here. But I thought, I really, really would be surprised if I see price trading underneath this candle body. And if so, then this whole setup is probably fucked, okay? So, hard stop at the lows. Just wanted to tighten up that trade a little bit, tighten up the art a little bit. And then essentially for the take profit, just simply took it to the range highs. So I had a limit ask here to take me out of position. Normally I set alerts as opposed to, automatic orders, but I thought I'd put one in there because this is, a 7.5 hour trade essentially. I took entry at midnight, and I thought in case of a freak incident where this just streaks up overnight, I'd be very, very happy with this as a trade play out. I don't need to be greedy. Yes, you can see we went up a few more ticks afterwards, but I was very happy with this as a sort of proposed trade setup. Okay. So yeah, essentially there you have it. There was one stab on the hourly divergence, maybe being a little bit too cocky with it, but that's fine. We didn't even lose any money on that trade. The second entry that should have been taken is a note to self for the future, but regardless, we still had a clean entry based on both the 4-hour and primarily the 6-hour candle close. And yeah, this trade, I just wanted to show it to you guys. I promised it'd be a short video, but I just wanted to sort of run through this trade because this was a very nice trade, 7.5R in what was 2 days here. Yeah, 2 days, pretty much exactly 2 days. And normally looking at some of the previous trade execution videos, we're using the lower time frames as our execution, the higher time frames for our thesis. Here we had both the higher time frames for our thesis and our execution using the 4 and 6 hour candle body closes, which is a bit of a different style. But in honesty, sometimes these trades, they can be just that simple, a little bit less stressful, of course, as well. And, with sound logic, these trades can play out very nicely. Anyway, guys, that's it for today. A very simple trade, a 4-6 hour bullish divergence into daily intra-demand, 2-day play out, 7.5 hour trade. Hope you guys garnered some valuable insights from this video, and yeah, I'll be sure to check in soon.